Hi guys, Max here, and yesterday was actually an okay day in the markets for once. As you can see behind me, this is the S&P 500 and there's a fair bit of green there, and there's some strong green there as well for companies like Amazon and for some of the other large tech companies. The rest of the market did okay for the most part, mixed bags as you can see, red and green all over the place. Energy was really quite poor, with most energy stocks falling by something like 5, 6 or even 7% for the day, and the answer for that is pretty simple. Oil prices fell, but more on that in a moment. For the indexes then, things were okay. As I said, the S&P 500 rose very slightly by 0.2%. And the Nasdaq did far better. As you can see, tech stocks clearly outperformed, and so it rose by 1.2%, and then the Dow Jones fell by 0.2%. It is Saturday now though, so how did stocks do for the week on the whole? Well, not brilliantly at all. The S&P 500 did close down at 4.2%, which makes it one of the worst weeks that we've had for the last couple of years, beaten only by that peak of the pandemic crash. Now, in the rest of the world, it was again a bit of a mixed bag. As you can see, individual companies moving respective to their individual pieces of news and developments, which is how we like to see markets behave, to be honest. The FTSE 100 was down by about 0.4%. The Stoxx 600 was up by about 0.1%, mixed all over the place. Now, the dollar actually returned to its recent ways of strengthening and rose by 0.8% against most other major currencies. The euro fell by 0.5% and is back down to $1.05. The pound fell by about 1% and is back down to $1.22. And the yen fell by 2% and is now back down to 135 per dollar. For fixed income assets then, was there a lot of volatility like we've seen over the rest of the week? Well, not really. The US 10-year Treasury yield rose very slightly up to 3.23%, still a high level, still well above where it has been over recent weeks, but not nearly as high as those spikes that we saw earlier in the week. In Germany and Britain, 10-year yields fell by about 5 basis points, so again, no major volatility there. Now, with oil prices, as I said, they fell across the board. WTI crude oil fell by about 6% and is now down to $110 a barrel, with Brent crude at 113. Now, that is really nice to see, don't get me wrong, but unfortunately, it comes from speculation and investors, not from real intrinsic demand and supply. Basically, speculators are clocking on to the idea that a worldwide recession is pretty much imminent at this point, and so they're anticipating lower demand in the future, and so they're pricing that into the markets now, which has forced prices down. Don't expect this to be an overarching trend that will go in one direction and won't turn around. There's going to be a lot of volatility here into the future as investors and speculators try to judge the likelihood of this recession and then how much oil demand will be affected by it. As for crypto then, did we at least stop the bleeding there? Well, no, not at all. Actually, we kind of did for yesterday's trading day, but overnight things just took another turn for the worse, and we've seen new lows for the crypto market. Bitcoin, as you can see, down almost 9% for the day and sitting at $19,000. It actually dropped below $19,000 for a moment. Ethereum fell by 9% as well and is down below $1,000 at the time of me making this video. Altcoins all over the place down in that region as well. 10% for the day. It seems to be about par. Now, with Bitcoin down at $19,000, it has finally fallen below the previous cycle's all-time high of 2017 of about $19,000 as well. And this is a big thing because it's been a parroting point coming from lots of people who believe in the intrinsic value of technical analysis and Bitcoin charts and things like that. And they've basically all claimed that it's impossible for Bitcoin to fall below a previous cycle's all-time high. I've said that this is a little bit absurd and has no basis in reality because Bitcoin's price is just a function of supply and demand and not some innate creature that follows perfect patterns. Of course, that idea has now been fully debunked, as with most technical analysis charts regarding Bitcoin. The rainbow chart is next to go. Plan B has already gone. So if you are someone who believes in those faithfully, I really would encourage you to consider your positions. Now, was there any actually specific bad news to trigger this further drop in crypto prices? Well, yes, sort of. As you can see here, another crypto lending platform called Babel Finance has halted all withdrawals because they've run out of money. This is basically another run on the bank. It's basically the same as what happened with Celsius earlier in the week, but Babel is a far, far smaller platform, so it's not quite as bad. It's not quite as impactful. To be perfectly honest, I don't think that this piece of news is responsible for this second drop that we've just seen. I think that the second drop is just natural as investors start to panic, as liquidations are getting more and more common, and an awful lot of people are turning around on the crypto market and they're calling it a scam and saying that they never liked it in the first place and they're trying to get out of their positions. That doesn't mean that this news is good, and it doesn't mean that it's not significant, but I just don't know if it is the specific reason for this continued crypto market rout. As for traditional financial markets, why did they behave the way that they did? Well, again, there wasn't really any specific major trigger that caused tech stocks to rise and traditional industries to fall. It's just investors and the markets trying to accurately price the data that we already have and that frankly we've had for a few days now. It is now widespread common held belief that actually a recession is coming. The New York Federal Reserve have come out with a model to try and predict whether or not a soft landing is possible. And with current market conditions, they put the chance at just 10%, which is really damn poor. It means that basically, yes, a recession is coming. A soft landing is not going to be had. And as market conditions and the statistics that go into building this model seem to be getting worse every week, I don't see this turning around anytime soon. I think it's pretty much a foregone conclusion at this point. Yes, we're entering a recession. Now, Biden has come out and announced that he's going to be putting together a new economic plan to try and get the United States back on track. We don't really know too much about what it's actually going to be, but it's probably going to focus on two different things. Reducing the fiscal deficit, first of all, so either raising more tax revenue or spending less money, which actually should help on inflation. And then the other big thing he's doing is going to be targeting inflation in particular. We don't exactly know how, but let's be honest, that's a good thing if it comes to fruition. There are some other little bits and bobs there. I believe he wants to try and limit the price of insulin, which is a hot topic for the people who are forced to use insulin and is an injustice in the American health system. So that's good news if he does go that direction. Really though, that's more a vote buying thing than actually some kind of economic model to follow. Now, the final bit of news here today is that actually the Swiss National Bank has come out and raised interest rates, which is really quite huge news because they are a very, very conservative central bank, and they never took on the insane quantitative easing that the rest of the world did throughout the pandemic. They were far more restrained, and because of that, they've kept their inflation levels far, far lower than the rest of Europe, than the UK or Germany or Italy, for example, and the US as well. Of course, just because they're not stimulating demand to a ridiculous amount doesn't mean that every other country in the world isn't. So they have seen some inflation and it has started to tick up recently. They're also subject to the same energy price hikes that they see from the sanctions against Russia and the war in Ukraine as well. So they're not immune. And so the Swiss National Bank is finally taking action. This is worrying to a lot of people because of how conservative and reserved they are. And it's sort of been seen as a siren or a warning sign about the impending recession that's going to engulf the entirety of Europe. Basically, if even the Swiss are worried, then you should be worried too. Now that is actually pretty much it for today. I'm sorry if it's a short day, but I've got a lot on today, so I didn't really have too much time. There isn't going to be a second video coming out later, but there is one final thing to talk about. There is a fraudulent Facebook page called Stoic Finance, which is not run by me or anyone related to me. It's been reposting all of my stuff. It's got a couple of thousand likes. I reached out to Facebook to try and get them to take it down or to, do something. They've just outright refused. They are not being helpful at all. So pretty much the only option I have to try and stop this guy from stealing all of my content is just to get everyone to report it. If you've ever seen any of my content on Facebook, well, that's actually the fake page because I don't have a Facebook page at all. So I'll leave a link down below in the comments and the description. So if you do have just a couple of minutes, I'd be really appreciative if you can go and report it for being a fake page. And hopefully we can get this person to stop doing what they're doing because Facebook just don't care. Facebook, one of the worst companies alive. I personally hate you. I now feel I have a personal vendetta against Facebook that will last for the rest of my life. I might even go out and short some stocks. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.